Good afternoon, ladies and gentlemen. It is 3:30, and I'll call this work session for the Burnsville City Council to order. Today's meeting is starting early due to IS 194 special election. Minnesota statute does not allow us to hold public meetings during a special election, so we will have a hard stop at 6. We begin because we can't hold meetings between 6 and 8 on election days. And if the clerk could note that all council members are present. And we're still in a global pandemic crisis, so our meeting is conducted both in person and online. Members of the public may attend in person if they choose, or the public can watch this meeting online at burnsvillemn.gov/meetings or Comcast channel 16 or 859. The public can also participate through Zoom by joining us at zoom.us/join or by calling 651-372-8299. More information is available on our meeting webpage and in the council agenda packet. If Zoom meeting attendees experience issues, we ask that you leave the meeting and log back in. That usually solves the problem. Okay, and this is a work session. We go directly to our agenda. The first item on the agenda is, nope, that's not it. The first item on the agenda is the 2022 budget, growing community and organizational health. Presenting this afternoon is Jenny Rohde, our finance director, and Stacy Kilvane from Ellers. Jenny, are you going first?
Yep, I'll just make a brief introduction here. Work on the 2022 budget has begun, and in preparation for that, Stacy Kilvane and Jason Arswold from Ellers are here to give an informational update on budget, reserves, tax capacity, and valuation and trends. So with that, I will turn that over to Stacy.
Stacy, welcome, and yes.
Thank you, Mayor, members of the council. It's nice to see you guys in person. You're like one of my consistent that I actually get out of the house and come live to see you. So, well, let's just get started. As you're starting your budget process, just show a graphic of, what a lot of other cities are going through is like, oh my gosh, what are we going to do? Or that the budget process seems like such a big and cumbersome thing. But the reality is that you guys are doing it right, at Burnsville, is that you have your strategic priorities as a council that you have set. And that's kind of your guidepost as you move through your budget process. As we always say, doing the budget is the most important thing that you're going to do as city council members, because what you're doing is you're really setting the priorities and the vision for what you want your community to look like and the services that you want to provide for your residents. So just as we look at your general fund revenues, we're just noting here is that property taxes is the biggest piece of the pie. That's not unlike for every community. There's just limited resources that are available to local units of government because you're really restricted by statute in what you can have for revenues that come in. So in your case, for the 2021 budget, you have about 71% of your budget is coming from property taxes. So when do cities receive funding? You guys know this, but for anyone listening at home may not know it. You guys basically get paid twice a year, right? So everyone pays their taxes in May, and you'll get your settlement from the county starting in June or July. And then everyone who pays their taxes in October, you'll get that settlement in December. So really you count on, those property tax settlements coming in, and we show here January, you may have a little bit more cash. That's a lot of time when your license and fees and permits that may be coming in as well. So that's why we lead up to, reserves. There's always discussion on that, and why do you actually need them? Well, again, you're paid twice a year, so to speak, that you have. So in between, you need money for cash flow to pay for staff, salaries for services, and any capital needs that you may have, or any debt service needs that you have as a community as well. Now, when we talk about, what are those parameters, typically GFOA and the Office of the State Auditor recommend that you have a fund balance of 35 to 50%. I would say that typically, most communities are probably in that 40 to 50% is where they're targeting. And your policy, I believe, is 40 to 50% is where you're trying to target as well. So as we look at the fund balance that you've had on average from 2016 through 2020, you've been right around that 50% mark, which is great. And we typically see that, with higher rated or AAA communities like you guys are. Now, I know last year you used a little bit of your fund balance to maybe buy down the levy or to, lower taxes just a little bit. But what we always recommend is that if you're going to use your fund balance at all, use it to invest in something, right? So it's, invested in capital or invested in streets or invested in something that, you're just not having nothing to show, so to speak, for the next years or the future years that may just go by the wayside. So it's having something tangible. Like we say, we all have savings accounts, you just don't want to go and, go to Vegas with it, right? And just because you're never going to be able to capture that back, or you might not have something to show for that. Now, any continued use of fund balance or drawdown on those reserves can have a negative impact on your bond rating in the future. Just highlighted in the presentation there, essentially the last report from Standards & Poor's, who rates every bond issue that you do. And they note that a downside scenario is a decline in your financial health and reduction in your reserves time over time. That would put you at a level that's not commensurate with AAA rated peers that you have. Now, what I can say is I think most AAA communities that are out there are at least have that 50% at their fund balance. We see some as high as 70 or 80%. So talk a little bit about just budgeting 101, the city tax levy. So who determines it? Well, you find folks up there, and I love your guys' new picture because it's much nicer than the standard up close portrait. So, but basically your tax levy is the dollars that you need after all the other revenues that you get to run your city, okay? So it pays for your staff, your services, your programs, your capital needs, etc. And you only get what you levy, okay? So people sometimes have a disconnect with that. So some people think, oh, property values are going up, so I'm gonna get, my taxes are going up. No, you only get what you levy. So you figure out what do you need for that vision of your city, and what are the dollars that you need, and then you can figure out your levy from there. So what the city tax levy pays for, your 2021 levy, 74% is personnel, okay? You're not atypical, that's cities. You're not in the business of making widgets, okay? You are a service organization. So typically all cities are gonna have that high of a percent that's paying for staff and programs that you have within your community. Correlates to your service level. So as we look to start calculating, your local tax rate and the amount of levy that you're gonna do, is we have to look at a few defining things. So the first thing that we look at is tax capacity, and that's the tax capacity of all the real and personal property within your community. And obviously, as you know, that's determined by the county assessor, who assesses January 2nd of every year. They let us know what that's gonna be. And it's the value of the property multiplied by the applicable class rate. So us as single-family homeowners, if you're a single-family homeowner, it's 1%. So it's your value times 1%. If you're an apartment owner for market rate, it's 1.25%. And commercial has a split class rate, and so on and so on. So then that gives us a net tax capacity that we have when we get all those accumulated together, and we use that for determining the local tax rate. And so that is your tax levy, so that's the money you need to run the city based upon what your vision and strategic priorities are, and then you divide that by the net tax capacity you have in your community. So when we look at your 2021 tax rate that you had, the numerator, so your net tax levy was about 34.5 million. The denominator, or the net tax capacity of that, was about 80 million. So your local tax rate is just about 43% is where it ended up. And then when we take that and equate that to your average value home, which is $277,300 in your community, again, that's the estimated market value. You get a decrease for the taxable market value that the county sets aside. So that average value home of 277 gets taxed at 265,000. So that gives us a tax capacity when we take that 265,000 times 1%, that gives us a tax capacity of 2,650. And when we take that times your local rate, that average value home is paying $1,100 in city taxes alone. This doesn't count the school or the county tax out there. This is what they're paying for all the services that they receive within your community. So when we look at that, and how does that all break down at the end of the day? So that $1,136 that average value home pays, just about 60% goes to public safety. Okay, that's not atypical. I would say we see public safety costs, including police and fire, range anywhere from 50 to 80%, depending on the community that you have there. Your next highest is your parks and natural resources, which again isn't atypical for any of those assets that you have within your community. But at the end of the day, as it starts to break down into your major categories, when you look at that $1,100, basically that homeowner is paying $3 a day, okay, for the services that they receive. When I do my own computation, because I am a tax nerd, when I look at mine, I pay about $5.36 in my community that I live in. So I go, for $5 a day, am I happy with the roads? You know, am I happy with the park system? Am I happy with the services that are here and available? And that includes everything from retail or other things that may be available to me as a community. And I go, yeah, I feel safe. Yeah, this is great. I'm happy to pay that. So just some of the things to think about as you start to go through, you know, the budget process, and you guys are a little bit more sophisticated at this than some, but, you know, every city pays for everything differently. So comparing yourself to your neighbors isn't always fair, okay? Some people have franchise fees, some don't. You guys do. Others may have utility street light fees that they charge. There's other things that come out or how they pay for certain things that they do. So you got to figure out what you want to do within your boundaries that works for you and works for your residents. Every city has a different market makeup, and Jason's going to talk just a little bit about that with some of the comparisons that are out there. You know, some are more heavily weighted in bedroom communities. Some are more heavily weighted in commercial or have high buck, I would say, healthcare facilities and other things. You're somewhere in between there. You only get what you levy, and that's what we talked about before. So just because property taxes, you know, or property values go up doesn't mean your taxes are going to go up. Just because property values go down doesn't mean your taxes are going to go down, okay? It's all about how much you levy. So you're figuring out, what do we need to run the city and do the things we want to do that meets our strategic priorities. Majority of the budget is for staff, okay? So it's always hard when it comes to times when it, you know, maybe, you know, harder or tougher times that we saw when we had recessions back in 2008 to figure out, because at the end of the day, you know, if you're happy with your service level or that's what your community benefits are that you want to do, otherwise you're going to be looking at reducing staff and services, okay? So you get to choose what you do for that, but that's always a hard thing to look at and to do. But so really where it puts you is that you've got capital decisions that you can make, equipment decisions, and then how you want your infrastructure to look or be funded or to take a break from there. A lower 22 levy will result in a higher 2023 increase than your normal, okay? So every city, you know, tends to kind of do this steady, you know, across. That's where they all like to be going. But when they look to do a dip, that means you're not going to get the benefit of compounding the next year. So if you do a 2% this year, you may have to do an 8% next year when you were typically doing a 3 or 4%, okay? That's just the way the math works, essentially, for things that you want to do. You shouldn't use the fund balance to reduce the levy. Again, really look to use those dollars if you want to do it, because that's your purview to do that. Look to invest it in capital or assets or other things that really help define your community and set you apart. And then, of course, as you know, there are limited resources that you have as a community as you're looking to budgeting. I wish we had more magical pots of money or that money tree out back that would help alleviate things for a lot of folks, but unfortunately, we don't. So with that, I'm going to turn it over to Jason, who's going to talk a little bit about valuation trends. You want me to click through?
If you would, maybe. Good afternoon, Mayor, members of the council.
Welcome, Jason.
Thank you. So we did assemble a little bit of information to provide some context as you start thinking about your budget. The first slide here has to do with where the taxable market values are headed in the community, and it's broken out by property type. And as you can see, things are growing, so your values are going up. You know, residential in the blue bar there is still buying away your largest market value contributing factor in your community. And, you know, a couple of other things to notice on this chart is just that, you know, we start looking at commercial, which really includes a lot of the retail uses that are out there, is declining as a percentage of your total out there and your total market values. But you are starting to see some growth as a percentage of your market value in both industrial and in apartments. And we got a little more data about apartments specifically, because those have been the largest percentage valuation growth going back since that chart started in 2018. So what we saw is that those apartments grew about 8.56%, while some of the other categories, industrial, as we saw, grew as well, almost 7%. commercial, while it's going up in value in an aggregate, it's losing its share as a percentage of your total, and that's really what the piece of it that we saw out there that was something to be thinking about. And then,
I think you'd say that all your apartment appreciation is all that new construction you got going on, so that's been a big help to your community.
right, yeah, and so that's really driving a lot of that total overall growth as well.
But isn't that also a lag?
There is, yes,
Yeah.
Mayor, that's correct. And so this chart, what we tried to do to sort of put a finer point on that with respect to the apartments is looked and projected forward to those things that are out there in the pipeline and what those are going to ultimately look like when fully valued. Because again, this is gonna, Stacy talked about the tax base and how important that is in determining what ultimately what your tax rate is. You can control, at least to some extent, with the decisions you make about development in the community, what that tax base starts to look like. And so what this is showing you is that we broke all the PowerPoint rules here, but there's just a couple of key takeaways from this slide is that those new apartment projects are contributing $273 million in new taxable value. And I can't even see the numbers on the chart anymore, but it's over $3 million in tax capacity. And if we were to translate that using, your current tax rate into tax dollars, I think we say, what is that, 1.4 million in what that results in actual property taxes at your current tax rate. So as a community that is basically fully developed, we're gonna start to see redevelopment and vertical development starting to become the way you grow your tax base. And this is another way to look at that, same kind of set of numbers, just where the values are heading. This is how those values show up as a percentage of your total. And you can see residential as a percentage of your total has remained pretty steady as a percentage of the overall. But where you started to see some decline, as I said, is in commercial properties, your retail properties. We look at we were looking again today at the valuation of the Burnsville Center. It's about, it's less than half of the value that it was in 2018 for pay 2022. So a really big jump, went from like 134 million down to something like 66 million, I believe it was. And so those are things that, you need to pay attention to as you start thinking about this. Industrial is going up. That's one of the bright spots, and we're seeing industrial property generally as a class of properties increasing in value as, the economy starts to shift towards those kinds of buildings. And then as we talked about, the apartments again are being driven upward as well. This is a chart that I kind of like because it puts you in perspective with some peer communities there. These are some communities that we know you look to, some of the ones that we also thought were fair comparisons for Burnsville. But this shows your tax capacity or your total property wealth per capita. So we tried to normalize that for size because obviously all of these communities on this chart are of varying sizes. And so you fall, roughly in the middle in terms of your property value on this list per capita. You can see how there are several communities, Edina is a big outlier, for example, but we also point to St. Louis Park quite often because that number in St. Louis Park wasn't always that high. They've been pretty aggressive in terms of redeveloping their built-out community with a mind towards making sure that tax base number goes up so that they can manage their tax rate and tax burden overall and continue to do all the things that they want to do as a community. So we just point to that as an example that it is possible to make change in this chart for you, even though you have, not a lot of space left to develop, that isn't redevelopment. And then Edina, same thing. They've done a lot of redevelopment as well. They're a little bit of an outlier just because of the fact that there's some extremely high valuations there for housing and some of the property types that are there, the office and commercial development, but still redevelopment has driven that number upward quite a bit as well. A little bit of different way to look at that is what does that then translate to? Stacy talked about the numerator and the denominator to figure out, how you calculate your tax rate. This is the tax rate as compared to those same peer cities in the bars there. So your bar is in yellow where your current tax rate sits, and that's how you stack up relative to those same peer communities. And then the line going across the top there is the city's levy on a per capita basis. So I think about this, and I even think I confused Stacy when I talked about this, so I said that's probably not good, is that I think about that as this is how much you spend per person on government. That's the simple way that I think about it. And so it compares kind of where your tax rate is relative to your spending, right? So you've got, If you look way out on the right, you've got Edina and Plymouth. Well, let's look at Edina. They're spending a lot of money, but they have a low tax rate. And they can do that because they have a big tax base. And so that's kind of how those things interplay with one another, and why we think it's important to continue to focus on that tax base for you all. So just some takeaways to think about as you're budgeting from those pieces of data. You know, you're still a residential community primarily, and you know, taking care of your neighborhoods and your housing stock is going to be the thing that continues to shore up those property values, you know, for a long time to come. If we start talking about growing the tax base, apartment development is the thing that's driving that right now. So as you're thinking about how best can we grow our tax base, that is where you're having currently the most success. A lot of that's driven by the fact that when we redevelop areas of the community, there's an opportunity to go vertical there with valuation. So it just makes logical sense when you think about it that way. You know, declining commercial sector values, again, as a percentage of your overall valuation. So it's just, again, something to be mindful about. You know, where are those things headed? What are the pressures going to be going forward? What are the things you can do to help mitigate that or deal with that? And then as I think I've said now probably 3 or 4 times, as a fully developed community, redevelopment is going to be the way that you're going to be able to grow that tax base. And it's going to be ultimately a way to manage that tax burden. If you think about that previous slide with Edina spending all those dollars on running government with the low tax rate, they can do it because of that large tax base. And so, again, just thinking about some of those things about redevelopment, apartment infill, and even residential rehabilitation, all of those collectively are going to be important to continue managing that tax base. That's all Stacy and I had for any of the formal pieces of this presentation. We're certainly happy to stand for any questions that you have.
Thank you. Questions for Stacy and Jason? No, this is a good refresher. I always like, because there's always something to learn and to think about as we move towards our budgeting process, which is next month. So this is a great timing for that. Thank you, Melanie, for making sure that we have a refresher for understanding all of that. And it's also good for our residents to know about all of that. Councilmember Workman.
Thank you. Good presentation. Just quick follow-up question. There was a lot of comments about not using our fund balance for levies. I don't think that's a practice that's done frequently here. But have you, or did you see other communities consider or implement something like that, just in light of the pandemic and kind of where we were last year in your experience?
Yeah, Mayor,
Yes.
Councilmember.
Stacy.
We didn't see a ton of cities, or a lot of cities go that route. I think, like you guys, everyone was just conscientious thinking about what's the future impact just overall to residents on that tax levy that they were gonna have. That you may have seen lower increases in the tax levy than what they probably traditionally would have done. Most communities try to stay away from using fund balance in order to do that. So they just look to say, where can we do some of the bare bones things, knowing that they were gonna have a bigger increase the following year.
Yeah.
So like Dakota County, I think they did a 0 levy, so there was no increase there, but they didn't pull from fund balance. They've got a bigger pot of money, but in doing that, are they gonna have a boomerang shot back next year from the county perspective by doing something like that?
Mayor, Councilmember, yeah, I mean, that's the things that they have to grapple with. So, but always remember, just because is it a 0 levy increase or what is it? Because sometimes those get intermingled, you know, in what the dialogue actually is.
Yeah.
You know, so even though they may have had a 0 levy increase, they could have still had an increase in their taxes that they were receiving from all of their valuation that they had out there, so.
Yeah.
Thank you.
And if you remember, the biggest challenge and struggle for us, if we do that, we're going to have to pay it the next cycle. So it's only a 1 year where we're saying, okay, we're not going to tax and we're not going to increase it, but we have to then backfill. And that's always a problem.
It's called a 100-year pandemic comes around and you do things that you don't normally do. And I think we were righteous in what we did.
We did a
And
very
Dakota
good
County did do the same thing, by the way. I was told they used some one-time money.
Yeah, okay, good. Okay, anything else for Stacy and Jason? Oh, Councilmember Schultz.
So you mentioned in your presentation that cities don't make widgets. Could you expand on that?
Mayor, council member, yeah, you don't, when we say you don't make widgets, you're not a manufacturing facility, right? You know, so you're not a company that builds furniture or builds machines or builds computers. Basically, you are a service industry, very similar to what we are. We don't make widgets either. You know, 80% of our costs go into staff salaries. So you're paying, your commodity is staff and services. That's your commodity.
Yeah. The only product we have is water.
But that's not part of your general fund.
That's right.
But
It's
that's
a
an enterprise fund that's funded
It's an
separately.
enterprise
Yep.
fund. Yeah. Yeah. But, yeah, we're a service industry. Yeah. Okay. Anything else? Thank you so much, Stacy and Jason. And now we,
Madam Mayor, before
Yes.
we move on to the next item.
Okay,
Within your background, and thank you to Stacy and Jason, within your background, we've framed out a couple policy questions that we would ask you to think about. Is there any additional information you need or you'd like to, staff to provide as we look forward to the 2022 budget? We're working from the priorities that the council has established, but if there's anything different that you want us to be focusing on, certainly let us know about that. And is there any, I think I repeated that myself, any additional information? So certainly you can let me know, offline, but we'll be preparing for our June work session with you as well.
yeah. Kara?
So my question is, as we start to prepare on this, and I know you just got this information and we'll be looking through it, but I would like to know how that $8 million over the next 3 years will impact what we're looking at for these next few years on that. Because it would be a different discussion without that, so.
Yeah, absolutely.
Okay, anything else? Councilmember Keeley?
Well, I just want to reiterate that, there's a lot of moving parts still that we're dealing with. So next month, when we come to the budget discussion, I just want to make sure everything is in front of us, including everything.
Yeah, so there's
All balances, all forecasts, all monies available, everything. So we're not dealing with something that comes later on, whether
Yeah.
it's structural or one-time. I want to be able to see it all in front of me to help make a decision that's prudent.
Yeah, and one of the things is that there's a 30-day comment period to Treasury on all of this stuff. And that was clarified today in a meeting that Melanie and I were in. So this is what we have so far. There's still a lot of questions with regard to what is eligible for lost revenue. Because I wanted to make sure that Treasury has looks at all of the fees and charges that we waived. That's a lost revenue for us, whether that's going to be eligible for that. The other is enterprise funds. The other is things like the ICE Center and the Ames Center. They were shuttered. There's lost revenue there. All of these things, so all of those questions are going to go back to Treasury to really define so we have better understanding of all of those things that have to do with lost revenue. But there were also questions about what is eligible with regard to pay and insurance and all of those kinds of issues. But I believe that staff is also involved in some of the other webinars and calls around all of that. But there is a 30-day comment period before there's so we'll have a lot of time through our budgeting process to go through. So staff, like usual, will give us the high level on, and you can correct me, Melanie, in June, and then we get down into all of the granular issues with regard to the budget.
Yeah, Madam Mayor and Council, absolutely, there's a lot of moving parts, as there were last year, and we will continue to bring information forward. I expect that we'll provide some update at every council meeting on what we know as it develops, because things are moving quickly. So, appreciate that comment, and we'll make sure we give you the information that you're looking for, and if there's anything that you're missing, just let us know.
Okay.
It's probably a repeat of what you participated in today, but tomorrow, I believe it's at 4 o'clock, the NLC is
Yeah.
doing a webinar on
Yeah.
the update, so.
Yeah,
I would guess
NLC
it's
is
probably
doing a
safe.
GFOA. I think every organization is really trying to get the word out for everybody.
You should attend tomorrow's and find out what's different. Because there's a lot of interpretation.
Yeah, a lot, and that's why. And then we have two people from USCM that is working directly with Treasury, that's going to be working directly with our staff as well, and other municipal staffs as well.
So do we know for sure that the dollar amount that is now 8 million over 2 years, I believe Councilmember Schultz mentioned 3 years, it's over 2 years.
You think that's
Is
the,
that the
that's,
final number, or is it still a moving target?
we don't know because the
Survey
census,
says.
yeah, the census numbers still haven't come in. Have they come in, all the census numbers? No, the census numbers haven't all come in.
Madam Mayor and Council, again, hot off the presses, and Jenny can step in if I go astray at all. I think they use the 2019 census numbers and then the CDBG calculations. There were a number of communities that weren't in that, in the overall pool of allocations. So if you recall, the first estimate was somewhere around 11 million, then it went
Right.
down to 7 million, so it has been a moving balance. I think we're getting close, but certainly we'll have to wait to see if that number changes.
So a lot of the discussion today too, we're at the beginning, we all had like the 11 million estimate for us and other, but everybody got reductions. So that was part of,
What was the date discussed today for the disbursement of funds? Because a few weeks back, it was May 11th today.
yeah.
That
The
didn't
first
obviously happen.
tranches.
So do they have a revised distribution date?
So what we would have been hearing was that there's going to be a distribution date of May 10th, and then last week it was clarified that the guidance was coming out on May 10th. I'll look to Finance Director Jenny Rhodey to see if you know if there's been a disbursement date determined at this point.
I have not heard a specific disbursement date. I know they have a portal that you
Yeah.
Yeah.
log in, and then you have to find your community, and I think there has been maybe some technical issues with that, so I would think shortly.
Yeah.
I don't have a specific.
They're trying to harden everything because of making sure that it's safe and having a lot of cybersecurity. And I think, so who's
Just putting their,
yeah.
Let's
is gonna
just
have
hope
to
it's
put-
not the
information
same
in.
people who put the shuttered venue website up, because that was an
Well,
immediate
that crashed.
crash.
Yeah.
That-
And 3 weeks of getting their act together.
Yeah, yeah. So
That was
they're
the
doing a
SBA,
lot.
right?
Yeah, they're doing a lot of work around making sure that there is security and it's hardened all around. Matter of fact, they talked about whoever from the city is going to be the person making sure that the municipality, I think he said that you have to give your social security number, so it's your social security number. Because the organization doesn't have a, so you'll be putting in all of those numbers, but there's more information that they're asking for to harden it.
yeah, I think they want to verify identities is the issue, given their, the amount of money and given, all the cybersecurity issues that are out there right now. So,
Yeah, and it's prolific, and I'm sure you know about all of that too with the meetings that you've been engaged in. So it's a big
There's some,
thing.
yeah, it is big. I'm glad they're taking the extra steps. I mean, it's more important to get it right
Yeah,
and not have the site crash or not have things go wrong
yeah,
than to try and do it too early.
yeah.
The money
Okay.
go to the wrong city.
Yeah, money gets distributed to the wrong city, right?
Yeah, okay. If there are no other questions for Stacy and Jason, thank you so much. Okay. Yeah, all right, now we move on to the next item, and the next item on the agenda is the Housing Improvement Area Policy for Ridgeview condominiums. And presenting this evening is Regina Dino, Assistant Community Development Director, and Doug Stantness from Ridgeview Condo Association, and he's a representative for them. Ms.
Thank-
Regina Dean.
Thank you, Mayor. Good afternoon. Good afternoon, Council.
So yes, Doug is available to help answer any questions as we move through this PowerPoint. And then Stacy with Allers is also here, very familiar with HIAs within the Twin Cities and a great resource for us as well if there's any further questions. So housing improvement areas, we're allowed to create a housing improvement area for a townhouse or condominium per state law.
Yeah.
We do allow them according to a policy that was adopted back in 2004. Went through a governance process, basically said, here's the application process, here's the criteria, here's how we meet state statute, here's how, if you do want to apply for a HIA, here are some of the criteria that you need to meet based off of our goals and policies throughout the city. So that's all spelled out within that document. And we haven't changed it since 2004. We actually do not have any HIAs in the city of Burnsville. We've been approached many times at a staff level, but none of them have come to fruition. So we do have a specific request from Ridgeview Condos, located off Nicollet and south of Burnsville Parkway, very prominent location within the city. I pass it every day when I come to work. There's 402 units, about 30%, we believe, are rented out by the property owners. And just a little community breakdown, most of the units are 2-bedroom, 1-bath, about under 1,000 square feet. And there is a community room, office, and pool that's circled on the PowerPoint slide that is actually a separate parcel from the rest of the condominiums. And that shares a party wall with the Los Grandes Mexican restaurant. So just wanted to point that out. It's kind of a unique situation there, but part of that overall association. Now, with HIAs, basically it's a loan through the city.
Regina?
Yes.
That party wall, if I'm correct, they did it into like a condo, so the connection between the two, so that, because they're separate properties, but they have that party wall, but they're like condominiums, and they pay different taxes and so
Separate
forth.
properties,
Separate,
separate
yeah.
ownership, they just have
Yeah.
a shared wall, it's like a firewall that goes through the middle of the building, but completely separate
Yeah.
ownership.
It's like a really 0-0 lot line.
Yes, that's correct.
So is this part of that then?
So there's essentially two properties that are
Yeah.
part of the Ridgeview condos. The community room, indoor pool, and party room office space is
Yeah.
one parcel that's part of Ridgeview. And then the other parcel is where all of the housing units are located, and they have an outdoor pool and some other
So
amenities.
it's part of the ask to fix that community room and pool area?
Yeah, and the pool hasn't been used for a long time. Have you not been in it? I went and visited it.
I have not been in it, but I'm very well aware of it.
So we don't have a specific application at this point. The letter from the representative from Doug did mention for the units itself and for community type improvements, community capital improvements. That's something that could be negotiated or discussed as if you decide that you're supportive of an HIA for this project, and if they move forward with an application, if you say, yes, we're in support. So that's something that we can perhaps talk about.
I think we should.
Noted. So the improvements, so this, in HIA, essentially, it's a loan through the city, through bonds, and it helps pay for much-needed improvements for townhouses or condo associations. So in the letter from Ridgeview states that they're estimating $12,000 to $16,000 worth of improvements, and then each unit would be potentially assessed $30,000 to $40,000 for those said improvements. And just a sampling of kind of what's out there today on the ground, to give you an idea of the current conditions. And these were provided by Mr. Strandness a couple of days ago. It didn't make the packet just based off of the timelines, but I can certainly provide you copies if you'd like. But again, just a sampling. And then Doug, he's done a lot of work, Mr. Strandness has done a lot of work throughout the Twin Cities, helping different associations create these housing improvement areas, or HIAs. And he provided some examples of before and after for a project within the city of Eagan, and that you can see there. So Ridgeview is asking for consideration from the council. One is their support for them pursuing a housing improvement area application. And in your packet, there were some comments from Doug, the consultant, on potential comments or changes to the policy that you may want to consider. Again, this was adopted in 2004, our specific policy. Now, we do have a statement within our policy that says basically things can be negotiated, and so that's something that you can kind of contemplate or discuss this afternoon. Part of our current policy does say that you do need to be rejected by at least 2 financial institutions, which they've, before coming to you, we wanted to see, okay, check with these local banks first, or financial institutions, and they were rejected by 2 local banks. And so, again, one of the reasons that they're before you today. We do have 3 questions for the council. One, is there support to create the HIA for the Homeowners Association? Are there any, if so, are there any recommendations for changes to our current policy? We did have Ellers and our city attorney review the policy. They said, policy looks great, consistent with state statute. They said they wouldn't recommend any changes. I did also circulate the policy to our market cities to see if they had any comments or feedback. Very little feedback, said, oh, we might want to make some changes based off of what you have in your policy. There were a couple of notes, one minor modification that something wasn't in alignment with state statute regarding some percentages. And another comment about things that, for example, Brooklyn Park adds within their policy that if someone creates an HIA, they have to bring it up to code enforcement standards, and they may want to consider adding crime prevention design elements to the improvements, and maybe some sustainability type items. So that may be kind of an above and beyond type of thing that you may want to consider within the policy. And if you do decide that you do want to make changes to the policy and you're in support of an HIA, then are there certain things that you would want us to negotiate for? Councilmember Gustafson had mentioned, some things about the common office space just right now. So are those things that you want us to talk about should this move forward? So I'll start out with question number 1, Mayor. Is there support for the HIA? Again, it's allowed by state law. We have an existing policy that does provide direction. It does require the council to be supportive of the request, and there is an application process that they would have to go through. They do need to obtain at least 51% of the property owners to consent to this, and there is a requirement that they go through the process per state statute, notification requirements, and everyone has to be on board type process. And it's a lengthy process, but it can be done. But just want to open it up to you. Are you supportive?
Okay.
Certainly stand for any questions.
Councilmember Dan Keeley.
Thank you, Madam Mayor. Just trying to net this down to what we are truly offering in value with an HIA. It sounds like it's pretty much just a financing option when they can't get it through the private sector, for whatever the reason. So we're the fallback for what the banks just don't want to lend an older property that needs a lot of maintenance because they may not see don't want to deal with multiple owners, HOAs, et cetera, for payback. If they get 2 turn down letters from 2 area banks, then they would qualify to come to us. And then the city is just providing a low interest loan through our bonding power to allow that investment to go forward. We've debated over the years numerous different options for how can we help our single-family residents improve their properties because they can be a drag to the neighboring properties in the area if there's a home or a series of homes that are in really rough shape. The images that you showed of the 1970 condominium unit was exactly visually and physically what I saw the last time I was campaigning that motivated me to be more broad-minded, I would say, in accepting some sort of solution that the city could participate in to help people who couldn't get support elsewhere to be able to make some home improvements and improve the exterior. I was on Zillow a few minutes ago looking at various properties within this condominium complex that are for sale, and they all look wonderful on the inside. And now I know what the outside looks like a little bit more, because I haven't walked through there in a long time. I mean, it's in rough shape. I mean, they need a big HGTV makeover in a bad way on the outside. And so if this tool can get them there, it's a huge impact for the owners, for the area, for the city. There's a lot of condos in this complex. It's pretty big. So to me, the risk to the city is the liability on that loan, but I'm sure we've got some mechanisms with the underwriting to attach to protect us. I'm in favor of this. I think it's not a handout in any way. It's utilizing our bonding ability where the private sector will not provide the financing to that entity to do what they need to do to improve their property. So I'm in 100% support.
Okay, Kara.
So I have a couple of questions on it. As of yet, we're just at the very beginning of this. So the condo owners have not
Voted.
signed on to hit that threshold yet. Is that correct?
That's correct.
That's correct. Before going through that legwork, they wanted to make sure that there's council support, because if there's not council support, it wouldn't be worth them going through that effort. And I think Mr. Stradnis, he's possibly done some inquiry with the condo association, but we don't have the signatures or the documentation saying, yes, they're at the 51%.
Okay, and I have a few other questions, and this might be better suited. What work exactly are they looking to do? Is this to be on the units themselves, like the outside of the units themselves? Is it the private road areas? Is it the common spaces? I'm looking for what their scope of work is.
Mr. Stantnis?
Yes. Right now, it's all of the above. Before they start spending money on engineers determining exactly what should be done, as Regina said, would like some indication of support on the part of the city. Basically, if the city says, yes, we're open to it, then the next step would be to hire an engineering firm to do an assessment of the property. And they would look the entire property over top to bottom and say, these are the things that you need to do. And this is generally how you need to do them. But basically, it would be an overhaul of the buildings, the streets and roads, and the common area facilities.
Okay, and if I may?
Yes, please,
So,
Kara.
since this is a condo association and I live in a townhome association, which is a little different, I'm assuming they have monthly association fees. Is this correct or
Correct.
not correct? Okay. Up till now, they have perhaps not decided to raise those fees to do regular maintenance, and that has not been done for years. What is changing?
Mr. Stantnis?
Yes. The fees have been increasing. The biggest thing they have not done is fund their replacement reserve. Because with buildings, there's day-to-day maintenance, but then periodically, you've got to replace roofs and exteriors, and you've got to redo your roadways, and that's not what they've been funding. And unfortunately, it's way too easy for condominium associations to slide into this. The board of directors is solidly behind moving forward with an HIA project if the city is open to it. I have walked through the property, talked to the staff, talked to a few owners, and I said, what is the support, just generally, as a conversation? And they said widespread, because the people that live there are saying, we can't continue living like this. And the problem is that they've gotten to the point where to do what they need to do requires a lot of money. And their two other options are special assessment, and it's just not credible that you can special assess a project like this, or a bank loan, which they can't get. And to try and, I mean, even if they increase the dues 20, 30%, it would take them years to save up the money to do the kind of work that they need to do, and the property would continue to deteriorate.
Okay, if I may still?
Yeah, please.
So when you have the engineering report done, at that point, they will see the scope of the project with an estimation of price.
Yes,
And at that point, they will also see what it costs to continue doing their monthly dues, the additional value that they're going to need to do on their monthly dues, because they're going to need to start a funding replacement fund,
correct,
because otherwise we're doing this again.
correct.
And loan repayment costs.
Yeah. I think in the background, you said $30,000 to $40,000 will be assessed to each unit.
Well,
Okay,
spent.
and then I'll go to Stacy.
Oh,
Well, Mayor, council members, maybe I can shed a little light on this. So one of the requirements is that they do a reserve study as well after they do their engineering report to figure it out, because we want to make sure they don't end up where they are today in the future.
Exactly.
So they will have those exact costs of where they need to keep increasing dues to fund replacements in the future. Part of the process of the HIA is, once we get the report from the association, we take that document, we add in all the soft costs and everything that's in there, and we will show each unit owner what their total due is gonna be, and then what their monthly due increase is gonna be to pay for that as well. So they will get a comprehensive picture and understanding of what it's gonna cost to make those actual improvements. And then my final comment, I would just throw on to Councilmember Keeley, you know, as we stated before, over 60% of your tax base is your single-family homes, which these are single-family homes. So reinvesting in these is a good thing for the community.
I understand that. My concern is for these individual owners, that before they vote to go forward with an action, that they have a full understanding of the debt that they're going to be taking on.
We're required by statute to provide that to them. That's the public hearing process that we have on it, so they know what their dues are gonna actually be.
Yeah.
So that all happens, they have all that information before they take their vote?
Yep.
Okay, and, you know, I'm stressing this because, being in an association, I know what that's like to work cooperatively on this. And I also know what happens when dues go up, and then you have people in default, and what that does to an association. And it is absolutely rough when you have persons that are in their association, now they're priced out. There's no one paying the dues on that unit, and when it's a couple units, it's fine. When it's a percentage of units, it's suddenly not fine. So there's complexity to this, which I'm sure you are all aware, but I would like us to be aware of as well. So I get that it's great for the city to have property values go up. My concern is for these individual property owners who are in a tough situation right now. I would like them to not be in a tougher one. So as long as everything is very transparent, they get all the information, and they're realizing that now it's going to be, because when you're talking about, oh, it would be, you know, years to build this fund up, and we would have to jump it up 20 to 30%. I don't see how you do this project without it raising 20 to 30%. I don't. With the extent of what we're seeing, I have a tough time seeing that.
Well, Mr. Santness.
One of my suggestions is that Burnsville do what a number of other cities have done and make this a two-step process. Because it is so large and so complex, and the amount of upfront investment that the association has to make is very significant. And the two-step process is, step one, do a preliminary work, do estimates, and get from the owners what some people refer to as a statement of support, which basically says, based on what we see and what we know at this point, we're in favor of moving forward. And then based on that preliminary information and that statement of support, the city can decide whether the city's willing to give preliminary conditional approval to the project. And if that's the case, then the association can start investing really serious money in getting everything finalized and getting the board, the owners on board with signing the final formal petition saying, please approve this.
Yeah, okay,
I like that more.
okay, very good. Councilmember Gustafson.
I want to follow up with where Kara was going on this.
Because you get it.
I do get it. I would like to see if we do this, and to start out, I'm supportive of doing things like this. I think for the sake of our city, it's a good idea that we can get engaged with some of these properties that are aging and can't get financing. How do we help them through this whole thing? But I think we have to have some things in place, and one of them I agree with. There needs to be a sustainability plan. We have to see that plan. I need to feel comfortable that you're going to put money away for the roof next time you need a roof for the driveway or all that stuff. I manage a building very close to you, and I see that building all the time, and it's like it's falling apart over there on the outside. And I agree with Dan. And the inside probably looks just fine, but the outside looks terrible, and it's not good for the neighborhood. The other thing that me personally I would like to see, I think we have to straighten out this whole party wall thing that you have going with that building in front of you. This complex has, and I'm not throwing stones, but I will in a way. This complex has actually hindered redevelopment of that property in front of you, and that hurts all taxpayers. As we try to expand the tax base down here, which we just heard a nice presentation about, we can't expand there because that association has stopped that from happening. And so for me to support this, I think that needs to be cleaned up somehow so that if a developer comes in, that some things can happen down there. Because that whole Burnsville Parkway area is actually technically for sale right now. I mean, you don't see a lot of, there's a few signs, but there's a lot of buildings for sale down there, and a lot of it's all about the redevelopment of the city and about tearing buildings down and doing other things. And so I would like to see you guys work something out with the other properties about how that can be accomplished. But generous rule, I like working with the buildings and making things happen like that. But those are the two biggest things for me that concern me. Sustainability for you, and let's fix that party wall situation.
Okay. Dan Keeley?
Thank you. One of the listings shows their monthly HOA at $392. Being in an HOA and what I pay a month, which is less than that, I'm in a much newer, dramatically newer facility. We don't have a pool, but I would share Councilmember Schultz's concern for making sure that they can financially, because I can see this easily going to 500 or over 500, because if to handle the debt service and fund their reserve as they should. And I sit I'm the treasurer of our HOA, so this is something I've worked with the last 4 years. It's amazing how expensive that gets over time to just maintain what you have, let alone major siding, painting, roofing, et cetera, roads, and driveways. So I would share that concern. I didn't necessarily bring that up in my initial comments because I have a feeling that's all going to get flushed through this process, but I would echo that concern. And then the reason I pushed my button again is I remember that what Councilmember Gustafson brought up, that we have not had support from this HOA in trying to redevelop the other side of the firewall that they share with that building. And so I don't necessarily, I'm not a big fan of putting strings attached, but that has got to be resolved once and for all because it did actually cause a deal to go south recently on the property in front of it. And so I think it's a fair and reasonable ask, if it even is legally askable.
Yeah, it is.
For us to say, okay, this is going to be resolved in this opportunity for us to come in and help, because the city gets a lot out of it. The curb appeal of these units, when you look through the inside of several of them that are for sale, they look great. I mean, it is a dramatic difference from the outside to the inside. Each owner has done a really good job of taking care of their own interior properties. The HOA has failed horribly over the last 20 probably plus years to man up or woman up and, pardon me, person up. I heard that on the phone today. A man trap, and they corrected themselves. Oh, I mean a person trap. To really do the right thing, because it isn't easy when you're on an HOA board and you hear everybody grumble about the cost of things. That's all you hear. You never hear, hey, you're doing a great job keeping this place in good shape, so when I sell one day, I won't have to make excuses for why the road is in such bad shape. The exterior landscaping walls are falling over, type of thing. So I'm shocked that it's gone this long into this disrepair with HOA fees that high. I have to ask, what in the world did they spend their HOA money on, or what they are? But I have a sense is that they've gotten so far behind that they're really just trying to maintain. And I totally understand they're so upside down that they cannot, come up with the financial wherewithal to bring it up to, a improved state. So I think you had said if there's anything, I think Ms. Dean said if there's anything that we would ask for, that would be it. I think the rest of it is up to their HOA and the design and the architects they hire and getting the work done and improving that property so the exterior finally matches the interior. Because when that curb appeal goes up, I think these values for what they're being sold for is going to jump quite a bit. Thank you.
Councilmember Workman?
Thank you. I think when we started discussing an HIA, we had all kind of envisioned a $20,000 siding loan, and we're kind of going off with a bang here at 12 to 16 million, 400 unit HOA. When I was looking at the background, the two loan declinations both mention that it's unanticipated that the available collateral for such a loan falls outside of those banks' loan policy guidelines. Can you elaborate on that a little bit more for me? I mean, I want to make sure that if we're going to go down this road that we're not leaving ourselves upside down if something goes wrong in the future.
Okay. Ms. Cliff? Yes.
Yeah, Mayor, Councilmember, two things with regards to that. So most townhome associations or condo associations can't go out and get a loan because they don't own something collectively
Yeah.
that has value for that, for that collateral that they have. So that's why, they'll all get rejection letters because no bank is gonna finance them.
Yeah.
Maybe they'll give a construction loan that's a short term, that there's a guarantee the city's gonna take them out, but they're not gonna finance it. The way that you guys are protected, it's done through special assessments. It's no different than your street improvement bonds that you do, where you specially assess to the benefiting property owners. So it's collected, the fee is collected with the taxes, and then that's remitted directly to you from the county. So it's always there. Plus, we have things that we put in the agreement that we have with the association, that if for whatever reason, if all of the dues are not paid or collected in, that the association has to make up that shortfall until such time there is. But again, similar to your special assessments, we're assessing at 105% of debt service, so there's that additional that's coming in that you're building that reserve in case there are some non-payments. And what I can tell you from doing, I've done over 16 of these, starting almost 30 years ago, doing the first one. What we've traditionally found in cities that do a lot, so St. Louis Park has probably done the most of them, is that they don't have defaults on these, so that they don't see a lot of the dues not being paid. So if in fact there's someone that's having hardship or their unit's foreclosed, typically the bank's coming in and making those payments. But cities also do programs, which you guys have that in your policy that you're open to, is what's a deferral program that typically may be for income or age restricted folks that you can look at and review. So those are all things that we'll start to look at collectively as this comes forward.
Thank you. And then just for the record, I would echo everything that's been discussed prior. I'd really like to see a resolution at the Benchwarmer Bob spot. So we can, sorry, I've got a really dry spot in my throat. So we can get to a resolution there, and then assuring that all the residents are aware of and ready to take on something of this size.
Is that a $16 million?
All right. So, so for me, I'll start from our vision that we want to be a vibrant city. Go back to 2004 when we put this policy in place. We were looking at the city at that time and saying, you know, we are a city that is aging, and we needed to make sure that we had some tools in place. Some of you who were on the council at that time, that this was something that we needed to have to help condominiums and townhomes that are in an association. And so, but no one asked us in the past, or else they might have asked staff, but they just didn't have the wherewithal to go forward. Now, this group called me and I directed them to staff. The changes that have happened at Ridgeview is that they have a new board that is looking at least I think it's a new board that's being very diligent about their property values, and they want to continue to improve it. And so they're doing what is necessary. Second, I believe that they hired a new management company, and the new management company is the company that manages my condominium association, and that's First Service. Councilmember Workman would know that I just went through our condominium and putting a new roof, but we were assessed rather than going through the HIA process, and each of the homeowners paid the assessment for it. However, this is a older property, and I've walked the property. I've even visited the inside of the administrative office, the pool area, the party area. It really looks bad, really bad. And that pool has not been used in how long, Mr. Standis?
I don't know.
It's been empty.
Still have water, or is it just an empty?
Yeah.
Oh, it's a skateboard. That's what it is. Indoor.
Yeah, so that needs a lot of work. But I agree with my colleagues, you know, and this is on a PUD, correct? It's on a PUD. And one of the benefits of a PUD is that the owner of the property wants something, but in return for wanting something from the city, they need to give back. And that wall, that party wall, the past board have never been open to opening that up so that we can help with the redevelopment of that northern property. The other part that I'd asked staff to look at, because you're asking for us to use our general obligation bonds to finance this. And I had asked our city manager to talk with our consultants. I do not want to harm, and this is for transparency and also for our value of being good stewards of the people's trust, is that it does not harm our AAA bond rating. And I got back information that it will not, because it will be assessed just like a 429. So that it will make sure that we get our money, and it is paid. So the other part that I need to make sure that we address is under the policy, and because all of my highlights are all blanked out. Oh, and thank you for putting in place the improvement area process. That's very good with regard to how the process proceeds. So that's very good. But so they got the 2 letters, and this is looking at the policy that has 2 rejections.
So it does sound like there's some general support for the HIA moving forward. So maybe if I can move on to question number 2, are there any specific recommendations to changes to our policy? Again, it was reviewed by our city attorney and Ellers. They felt that the policy was very strong, that it does provide some flexibility, and that it does align with state statute. However, as staff, we did identify some minor changes that may be of consideration for change. Just aligning with our vision statement, strategic plan, and fixing any minor inconsistencies with state law. That would be up to you, council, and if there's anything else you've
one
identified.
of the things that we have is that we need to make sure that we have an ongoing, so that they have a business plan in place that looks at their sustainability with regard to what they need to do. And the other part in our policy that I want is that the city requires that the HIA fee stay on the property taxes when a unit is sold. And so I don't think that with regard to our policy, our consultant and our legal counsel says that the policy is good. They haven't suggested anything to change, have they?
Mayor, Councilmember, no. In general, your policy is fine. You have one reference in there about a 3-year warranty on improvements, but most contractors are only gonna give a 1 year. But again, it's a policy, so you can change it if you want. It's not law, so to speak. And the big thing to remember is that, one of those discussions that we'll have, and it will be with regards with finance and thing, is about prepayment of special assessments, okay? So traditionally, when we issue bonds for these, we like to say, they can prepay up until the time we make those assessments over to the county. They have a window period in which they can prepay, so we know that up front and what we're sizing. But once those bonds are in place, traditionally, most cities that sell bonds don't allow prepayments, okay?
So the other part.
But that causes a lot of
in our
consternation for the
policy-
homeowners, so
Yeah.
that's gonna have to be a discussion that we're gonna have in the future.
And I just want them all to understand, because our policy also states that the city shall review the contract going forward. The other part that I also want to make sure is that naming the city as a co-obligee and furnishing proof of insurance certificate, naming the city as a co-insurer. Because I don't want to be saddled with any of those things. So when I look at our policy, I think our policy is fine. The other thing is that it's also, we look at only 51% of the owners that must sign the petition, where most everything we do is 60%. And for this, way back then, we said 51%. So, yeah, our consultant and our attorney already reviewed the policy, and it's good. So I don't know if anybody has anything else, but for me, I am supportive of moving forward, because we want the city to be vibrant, and I've walked that property, and it is not very good. I mean, we all saw the pictures. It needs to be improved. Kara?
So, yeah, I am supportive in moving forward. I realize that, you know, sometimes things just snowball past what you can deal with on your own. Like, I get that. And also, sometimes, you know, places have a little bit of turnover and new people are in and they're willing to move forward on things. And so, I would like them to have that opportunity to look at it. So I am willing to look forward on that. I do not have any recommendations for policy changes. I don't think we have anything that's wildly out of the ordinary on that. I do like that two-step process that you outlined, because before that association gets too far into some upfront costs, I think that's a very good idea. That's very good caution on protecting residents. So that's something I would like to see happen as far as that process. As far as negotiating, I believe we've hit the party wall, but that's really the main point, other than the fact that, yes, we do need that sustainability document. And in that sustainability document, I do want to see in there the proposed impact of what those additional costs are, and if they have a specific amount of turnover because of that, which may happen, how the association can also deal with that as well. So I would like that piece included in there. But otherwise, yes.
Okay. Dan Gustafson?
Thank you, Madam Mayor. On the assessment part of this, is there different rules on that? And I know in real estate, when you sell a property and if there's been assessments, at closing, those assessments are paid back to whoever has assessed. Does that happen in this situation as well for each condo owner?
Mayor, council member, it depends. So that's always the issue. When we issue bonds, we typically say you don't want the prepayments because you can only call those bonds at a certain point in time.
Yeah.
So if you end up with all these prepayments, you may not make money or interest earnings on them, which you're anticipating to have to pay a higher interest on the debt. So we always have the discussion and massage, and there's a lot of detail analysis that we'll go through. I will tell you, the homeowners will not be happy, and staff will get lots of calls because everybody expects that, right? You sell your house, if there's special assessments, penny levy,
And where
they
does
pay it off.
assessment come from?
Right.
Yeah.
So that's all about a structuring issue that we're gonna have to look at, and again, some research, how often are those units turning over? Things of that nature will help inform what we think we would recommend to you guys as a
So
policy.
it's in the negotiations itself that
Yep.
it determines whether we can do
Yep.
that or not.
Yeah.
And I want to add a part too, I know you want to respond to that, but is everyone comfortable with a simple majority of 51%? I mean, if I
Yeah.
want a sidewalk in my neighborhood, I gotta get 60% of my neighbors to sign that. And
Well, back then, if I remember when we had the condominium people come in and talk with us, they looked at 51%. That's what most of them thought it would be okay, rather than 60, because we always go with 60, but it was their determination that 51%. But again, it's going to be something that they're going to have to negotiate with the homeowners of the association. The other part that they could do when they're selling it is pay off their assessment, whatever their assessment is. And that would be okay. That's what happened with our association with
thinking
regard
of
to
how
the.
do we recoup
Yeah.
quicker as.
And that's how that's
Because those
done.
condos are gonna sell.
Yeah, and that's how that gets done. Mr. Sadness?
Couple comments. No payoff at sale is very much to the advantage of the current homeowners, and I've got a lot of data that demonstrates that. And second comment is, this is the 9th year that Hennepin County has had HIA fees on a separate line. And it's been a complete game changer because you get rid of the confusion about it being a special assessment, which it is not. And you don't run into the problems when units sell that you would otherwise, because it's not an assessment. With the project that Regina showed before and after pictures of, have already started a conversation with Dakota County about putting them on a separate line. And the county said they're considering it. And if the city of Burnsville would be willing to join that conversation, that would be very helpful. I've worked on a number of HI projects with the city of Minneapolis. They have always said no payoff on sale. I don't know for sure, but they may have been a big part of getting Hennepin County to put it on a separate line. And my understanding is with them on a separate line and an HIA fee disclosure as part of any sale, the city isn't hearing boo out of anybody about why can't I pay this off?
Yeah.
So,
Yeah, but but within the organization, if they're gonna sell, and then they just pay off their assessment within the organization,
with,
they
no.
can't.
No, no. Mayor, council members, so when the special assessment is on their tax rolls for that,
Yeah,
they can't pay it off at sale if that is what you have put in there. And we already have the disclosure documents that go into each of the documents that say if it can or can't be paid off at the time of sale.
okay, so that's part of what part of the policy that says that, where did I put that?
I think, Madam Mayor and Council, that is a point of discussion for the council. We're looking for kind of a higher level conceptual feedback from the council.
Yeah.
I'm hearing that there's conceptual support for this.
Yeah.
There's gonna be other steps.
Yeah, because our policy reads that the city requires that the HIA fee stay on the property taxes when a unit is sold. So it's there
Yes.
in the policy.
So we don't have a requirement that the balance be paid off anytime a unit sells, right? It just continues on to the next
To the next
owner or the
owner.
next, right?
It's usually mortgage companies that are asking for that.
Yeah, so, because it's there, and I remember just making sure I put an X.
There's a lot of first-time home buyer down payment support opportunities out there offering $10,000, and it's essentially one of those deals where it's paid off when you eventually sell the house. And I don't know what kind of interest they charge, but it's a pretty nice program for younger
Yeah.
folks looking to get in their first home and they don't have the downstroke. It can, for the most part, cover the down payment and maybe even some closing costs, so they are able to get into the home with almost nothing out of the pocket, but it's paid off down the road, so.
Yeah, this also will allow some of those homeowners that purchased with an FHA mortgage to continue to hold their FHA. Yeah, so that's good.
Yep.
That's to your point. Okay, so.
We're good?
We have the
City
direction we
Manager,
need.
Lee and Regina, you have direction.
Yep.
Mr. Standis, you can let your client know that there is support. And then the first part of that process that you outlined for us, work with our staff. That's who you work with.
Yes.
Okay.
Regina, that
Yes.
third screen, we discussed already.
We did. Yes, the question about, are there any other items you'd want to negotiate? We had some of that discussion.
No,
and
we
we'll
just want to make sure.
Yep.
I think the biggest thing that all of us is that party wall.
Yes.
And
So
we'll
we can
continue the
do
conversation
redevelopment
as we progress.
And I'm just satisfied that our AAA bond rating will not be harmed. Yeah. Okay?
Madam Mayor,
Yes, Councilmember.
I don't know the last time this came up in the last 14 years by chance, or if it has, but we have a lot of older townhomes and condominium
Yep.
projects in the city of Burnsville, and I wonder how many of them are aware that this HIA exists?
Yeah,
For
you know,
if they're in a similar situation, because I'd love to see more take advantage of it and these properties get
Yeah.
dramatically improved.
I do remember a couple asking about them, Councilmember Keeley, but then again, they did not have the wherewithal to proceed, and they did not have someone like Mr. Standis to help facilitate that process for them. And of course, if you don't have a board that's knowledgeable, or
Yeah.
if they don't have a management company.
Have we ever advertised, marketed this as a program that we offered HOAs?
Yeah, that's a great question, but
We never
our-
have, that I remember.
Our economic development strategic plan speaks to this. Item number 4,
Yeah.
increasing the marketing and
Yeah.
awareness around our residential and business programs. I mean, this is something that we, with your consensus today and the discussion that
Yeah.
I'm hearing, something that we need to elevate and
Agreed.
really
Yeah.
showcase.
We have a lot of property
Yeah.
that was developed in the 70s and 80s.
Yeah, and I've walked some of those properties, not last year, but 4 years before that, and
Yeah.
it was, yeah. Yeah,
I got a hunch it'll be in the paper,
You think?
Because you brought it up.
because you're here.
okay, we're going to move on. Thank you so much, you have everything that you need. Okay, great. Okay, the next item here is the Dakota Broadband Board vision and discussion, and Mr. Venables, you're going to be presenting this.
Just a few slides. Madam Mayor, council members, thank you for having me back again.
Yeah.
Since our last meeting and discussion on activities at the DBB and processes moving forward. As you recall, we last met and discussed items about the DBB at the February work session. And I just have a few items I want to go over as far as the current activities since then, so that we can have the balance of the discussion around vision and goals as indicated in your background and the materials provided. And then I have a brief update at the end on other activities, Burnsville INET activities that may be of interest to you. With that, a few items have occurred since February. There has only been 1.5 board meetings since then, and I say 0.5 because one was cut short.
Tornado?
Oh, really?
Tornado warning.
That's right, because it was only that side, didn't hit Burnsville, but it was on the east.
That was our March meeting, and at that meeting, at least in the beginning, a company by the name of LTD Broadband was present and gave a presentation on their activities, and specifically around, they were an awardee recipient of a Rural Digital Opportunity Fund, or RDOF funds. In total, they were awarded $1.3 billion of RDOF funding to expand their internet presence through their traditional fixed wireless service, but also a majority of it now going forward through fiber optic infrastructure rollout in areas not only throughout Dakota County, but throughout the state of Minnesota and surrounding regions in other states. They gave a short presentation. Their plan over basically a 6-year period is that they've been awarded is a multi-state rollout to about 3,000 plus locations, at least in Dakota County. And again, that's a combination of fiber optic infrastructure and fixed wireless. They're willing to partner with any third party to help them in those efforts. That includes the DBB and any DBB member organization. And they're also willing to consider building out in areas beyond their award territories, the RDF territories. As it relates to Burnsville, because this was a rural fund, rural build-out digital fund, Burnsville, of course, doesn't have a lot of rural areas, so we have a very small footprint in terms of where they were awarded some space area. Most of that is
Southwest Burnsville?
Southwest, yeah.
a little bit more surprising than that, along the Minnesota riverfront.
Yep.
And then a little area near fire station, the new fire station number 1.
Oh,
So we can get broadband to the landfill?
I'm not quite sure, but the point there is that they can roll out their services beyond that, those areas that they're being receiving awarded funds for. And those funds are going to be paid out through a 10-year period. So it is what I would call more of a gradual rollout opportunity for them, so they can define it and build it and engineer it well. So I had an opportunity to talk to the person, Haley Tollefson, was the person who presented the DBB, and I had an opportunity to follow up with her and have a good conversation. And she's willing to come back and in front of the council and have a conversation if you're interested at some point in the future also. So that is one item that occurred since February. In addition to that, as part of the regular board meeting, the last board meeting, Executive Director Kara Koch provided some additional information on additional broadband funding opportunities that are available for households that qualify for emergency type of funding, and those are more short-term funds. The one in particular is called the EBB, or Emergency Broadband Benefit. We've actually posted some information on the city's website regarding that, so the details associated with that. And essentially, it provides funding for households that qualify for helping them supplement their monthly internet service fees, and then also provide some upfront funds for purchasing laptops and other tablets and other technology. Most of that funding is also going to be dispersed through the local service providers, and as far as I could see, all the local incumbent service providers have that available to provide as an option for households that qualify. Beyond that, the other updates or activities that occurred since February with the DBB was a continued conversation about the RFP process that you heard about last time we met. Since then, an RFI did go out. We were able to receive 4 responses from that RFI process from 4 different consulting companies and groups. The review of those RFIs were done by the Technical Advisory Committee, which then recommended the board move forward with an RFP process to formalize an RFP. And at that point in time, the board had conversations about the RFP process, but felt it was necessary to pause and not release an RFP at this time and provide an opportunity for members who wanted to come back to their local community, their local elected officials, and have further conversations about the DBB vision and goals to make sure that, at least as I understand it, the DBB is on the right track as it relates to the RFP process, and that the RFP would provide what the DBB wants in terms of the goals and future vision of the DBB. And so with that, that really is what tonight is about, and I've been asked to come to the council to talk and discuss, and in general, talk about the DBB's vision and goals. I did provide a document, again, provided by Kara Koch, that outlines at least the initial intent of the DBB as it was formed in 2018 through the Joint Powers Agreement. And then also, what else it highlighted is the items that were asked for in the RFP process. Now, again, the RFP hasn't moved forward, but those would be the items that were highlighted which would be included in the RFP that would focus on soliciting input from other stakeholders throughout the community, not just the local elected official and boards, but also community members and groups that could provide additional input through the process if the RFP were to move forward. And with that, before I move into anything else on my slides, I will stand for the discussion.
Questions? Thoughts? Okay. Okay. Doesn't seem to be any.
Okay. As it relates to the DBB vision and goals, again, in my slide, I've highlighted at least what the initial intent of the DBB was when it was formed. And we've talked about this, at least in the last couple of years, in previous meetings. Initially, it was to create a high-performance institutional network, or what we call the INET, for the efficient management of all of our assets that each member owns, to overall hopefully lower the cost of maintaining those assets and managing those assets and extending the ability to do more with those assets in the future. Consolidate services and collaborate on services and projects. And then also a major portion of what we're also seeing, at least recently within the last couple of years, is coordination of effort. And what I mean by that is the ability to know what our community members, our other member organizations are doing with their assets. And so we can collaborate on projects like traffic management projects. We can budget appropriately in our capital planning processes so that we can align those projects with each other as much as possible. And there's a little bit what I would call a clearer vision of that because of the way that the collective is working together and providing the information to the DBB, and the DBB making it available during their processes of either budget or their conversations going forward that allows us to see what is going on with each member city. it gives us an opportunity, at least in some of the projects I'll mention a little bit later that we're continuing to work on in Burnsville, to join in others that can also benefit from those same projects at the same time. Whereas maybe in the past, we would have done our own thing without any inclusion of anybody around us or any other adjacent communities. In addition to that, the institutional, the need or the intent to create this institutional network and maintain it was to leverage or utilize the excess capacity that the institutional network inherently has. And what I mean by that is the extra fiber that is installed. As we install fiber in the ground, we don't just put a couple strands of fiber, we put bundles of fiber in the ground. And typically we leverage what we need, and then there's always excess capacity. And the intent, again, with the JPA or the initial was to use that excess capacity to enhance business attraction, economic development, and then potentially provide, if that was a vision and a goal of the DBB, to provide wholesale access to that for anybody specifically. And then again, restated as we've talked about before, the intent was not to be a retail service provider and charge a service to residents and businesses. Before I get into INET updates, are there any specific vision or goal items that you would like to discuss and bring forward or have me bring back to the DBB for consideration as it relates to our activities and what you see the vision or goals of the DBB being moving forward?
Councilmember Keeley?
Thank you, Madam Mayor. Well, I'll go back to my earlier comments that it's like, I think it's been a year now. I'm still waiting for a clean IRU for an INET that we can sign off on and go forward. And it seems to me like it's been a constant delay game and shell game of how to skirt that and come back with a combined INET, CNET, IRU. And I mean, are we ever going to get a clean IRU for an INET so we can move forward on the INET and separate it from the CNET? And my second question is, I question why the DBB is spending any kind of money pursuing consultants and research on a CNET unless there's other cities that want it. If so, great, but don't use the money we're supporting DBB with to do it, because I don't think this council is interested in a CNET. We've kind of made that very clear multiple times in the last year. So I don't know, that's a fair question for you instead of the DBB executive director, but can you enlighten us on that?
As it relates to using funds for, on behalf of all the communities, they're following, at least Kara Koch, our executive director, is following the direction of the overall DBB board at this point. This council does have the ability to bring back an item on the DBB agenda to have that specific conversation and make sure that there is a vote that goes forward that would identify if the DBB supports continued activity towards CNET. Depending on who you ask at the DBB level or at the board level, there are communities that support CNET, and some that would even say that they entered into the DBB because of the CNET and the CNET opportunities. There are very few or no other communities that are doing any CNET-related activity other than us and the county and maybe one other member, Lakeville. But beyond that, the other communities haven't experienced any CNET activity. And as we, again, define CNET, that's any non-member leveraging member fiber. And in our case, again, most of our CNET activity is with other governmental bodies and entities. Did I answer your question?
Well, yeah, I mean, and we had a discussion where I remember Councilmember Schultz said, so if we opt out of CNET, but we do an agreement with INET, with the DBB, but other communities want to pursue CNET, fine, and if that traffic goes over our wire, we don't really care because we're really not participating in it. It's really, you know, when you connect all this together, how do you know what direction that digital traffic is moving, and if it comes and it ends up physically coming through our lines or not, whether we have anything to do with it, because once it's all connected, it in fact could be running through our lines. And so I think our position was, that's fine, we don't really care. We don't want to be in the business of the CNET, period. And we have some carried over from many, many years ago. We could let them lapse and get out of it. But I guess back to my original question, why don't we have a clean IRU for an INET so we could have signed off on that and moved forward? Why has it been a year and we're still nowhere further down that road than what we were a year ago?
Because I think we needed some information on the CNET. At least I wanted to understand that and how it affects all of the assets we have in the ground for us. And to not have the opportunity to understand what all of that is and how it's going to work. So for me, that's where it's at, where I'm at. Because I see this as a global superhighway for not only our residents, but our businesses. Because it goes throughout the world. You're going to have the ability to access.
Well, if you want to
the
talk
super
global,
21st.
let's just look at the amount of satellites that are being launched by SpaceX and Elon Musk. I mean, there is hundreds and hundreds of them. There's probably a few thousand of them already that are being deployed, and even parts of the state of Minnesota are going to be part of the initial test of that low orbit Wi-Fi service offered. But aside from that, you have this government-funded, the $480 million project that is covering Dakota County.
Okay.
I still am struggling with why we're struggling with trying to go down a road that I think the majority of this council made it very clear a year ago. We don't want to go down.
Yeah.
And so how do we just get out of that CNET process, focus on the INET, bring in our partners like MBTA, the school district, and do what we do best, and that is government fiber, and stop there.
Okay, Councilmember Gustafson, then City Manager Lee, and then Councilmember
Thank you for
Schultz.
clarifying. It was the majority of council, not the council, that was against it, because I'm still not against it. I imagine that just what we were just told by Tom, that there are cities that are debating this right now at the DBB. Carrie, you're at the DBB talking about it. Not everybody's in agreement there. And we can't make policy for other cities. We can only do it for ourselves. For me, if you want to talk about goals and the vision and that, it still has not changed at all. I've always looked at this CNET as new opportunities for carriers to enter the Dakota County and Burnsville markets at a lower cost. As you said in 2015, it was a no-brainer, Mr. Keeley or Councilmember Keeley. I'd like to enable choice for our business and residents. If it brings some other people in, it gives our residents and businesses some choice, which they don't have now. You hear that quite often. I see it quite often on some of our websites, Beehive and others that do talk about cable from time to time. And the third, for me, it was going to create a revenue stream to help pay for our INET, which is, we don't have to tax as much to pay for INET because we're getting revenue from other areas, just like we do when we rent out space on our water towers for our carriers for the telephones. And that we get revenue from that. It helps our taxpayers out, and it provides lots of service into the area and lots of choices in Burnsville, so we don't have just one phone carrier in Burnsville. And it's very simple for me. And I know you guys are against it, and I get it, and I'm not going to change your mind, but I'm not.
Yeah.
But I have to at least put out what I think this should be and what's going on there.
Okay, City Manager Lee?
Thank you, Madam Mayor and Council. I had asked Tom to be here tonight simply as a resource. Councilmember Schultz asked for this to be placed on the agenda. It was the action of the DBB board to say, rather than going out for this RFP, RFI, there are cities that want to discuss this more. Please go back and do that. And so that's really what, we don't come back with a revised IRU, council member, because that hasn't been the direction of the board. The board is, I think, discussing what is the future of the DBB. And at this point, we would look to the council for, are the goals and vision different? Does the council want to take a different position and formalize that? And then I think Councilmember Schultz would go back to her colleagues on the board and represent Burnsville's position. I think that's the goal of tonight's discussion.
Tom, did you want to respond before I go to Councilmember Schultz?
If I can,
Yes.
to answer Councilmember Keeley's question earlier regarding the CNET activity, And I think I have discussed this previously, in that if the council decides that you do not want to move forward with any kind of CNET activity as part of the DBB, that is still an option. We do not have to allow projects to utilize Burnsville assets for CNET activities. The benefit to the city, though, is that because we're part of the DBB and we're part of the CNET formula, or revenue share formula, as it is stated, we'll receive revenue even though they're not using city assets. We'll receive revenue as just being a member, a very small portion of revenue, if other communities are doing CNET-related activities. So that is one option to consider as we continue to move forward. Executive Director Kara Koch, to a second point, did send out an email in early April to the board asking for a review of the IRU language and providing any input and feedback. And the letter came from the DBB attorney and with some additional information on what the IRU language has in it, and if any additional feedback can be brought forward. Now, unfortunately, the board has not met since then, and
Tomorrow's is canceled.
and the tomorrow meeting is canceled, so the next time the board will meet is in June.
Right.
So the conversation is continuing, but it's at a very slow pace as it relates to the IRU, unfortunately.
Councilmember Schultz.
So yes, our city manager outlined it neatly. What I'm looking for is the same thing that all of our cities involved are asking for right now, which is to get new and clear goals from their council. Also, clear questions. So if we have questions about something specific, this would be the time to get those on record so that I can ask them and get the information back to council. Also, so that I can properly represent the position of council to go forward in whatever direction. So that's what I'm looking for. And so if the direction or the question that I'm to ask is, and I'll just, from what I've heard so far tonight, I'm not saying that is the direction right now, I'm saying that's what's being brought up so far. Do we separate INET from CNET? Do we agree to spend Burnsville funds to CNET if we don't do CNET? If we don't do CNET, can we do our own private contract? Say someone wants to come through our area and they want to use our fiber. Is that not possible? Do we just do a separate contract and charge our own price? The other question that's been brought up a couple times, and I will ask the board what they think on this as well, is defining a CNET customer. Because the question, and we've been discussing this on DBB as well, what is an INET customer or partner versus a CNET customer or partner? And does that, so is a CNET customer just anyone other than Burnsville city government? Or is the school district, are they INET or are they CNET under that language? Because there's some, amongst members on the board, there's lack of clarity on that. When they were hearing that we had CNET customers, I was getting asked what private corporations had purchased from us. And when I was listing off, who we're partnered with on this, they were like, but that's INET. So, that's another thing is, do you want me to bring it forward to get clarity? And it doesn't have to be how we define it, but clarity from the DBB on what do they even consider this, so that we all know what that term means when we're talking about it, because it does seem an area of confusion. But I want to get more information, questions from all of you, and also, what do we want to get out of this partnership? What is in Burnsville's best interest on this, so that I can represent the board on this.
Okay, Councilmember Workman.
Can you repeat what you just said?
No.
Jerk. To me, INET was always an institutional, government-funded organization, somebody that exists based on tax dollars or quasi-government organization. Workman Insurance Agency is not INET. ISD 191 is INET. I thought there was like a definition of that in the bylaws at some point. So that's how my definition or thought process has been on between the two. I was looking back through my notes from past meetings, and in just about every meeting, it kind of ends with, this thing is happening at the next meeting, so we'll wait to see how that thing goes. And then that thing comes back, and then, well, this next thing is happening at the next meeting. We'll wait and see how that thing goes. And to Councilmember Keeley's point, at what point are we going to kind of just make a decision? Have we heard enough information? A year ago, I think we were waiting to hear from the providers to see what they thought. I think we got all that information back from Arvig and the others in February. And now here we are. And I don't know that there's anything on the horizon that we are anticipating to help finalize a decision. I think we've all, at least the majority, has been consistent in what we're looking for, and that's been a break away from the CNET and stay exclusively focused on the INET, as we're not interested in participating in selling fiber to residents or businesses, but having it for our needs. So is tonight the night that we would like to make that decision, or do we need to send Kara back to the DBB meeting to tell them that that's what we'd like to do?
We don't have all the information tonight to make that decision. Maybe it's a direction to staff if we're going to want to make that decision and what the pros and cons are. Because there are pros and there are cons, but not everybody is in agreement with regard to the CNET and the INET. I'm going to go to City Manager Lee and then back to Councilmember Keeley.
I don't think that's.
Are you done?
Well, I was just gonna quick
Because
respond, because I feel like that's kind of been the foundation of this conversation since it started, is we don't have enough information. So my question would be is what information do we need to make a final decision?
Well, I think we have all of the information. You have all of the incumbents came in and spoke to the DBB, correct?
All that were asked to come in.
Yeah.
Have come in.
Yeah.
So,
And so I think that kind of background information, and then the pros and cons and all of that, because I look at the benefits of being a part of the DBB is outlined for us in terms of the efficiencies for public resources. I just want to make sure that we really understand both. If we're going to opt out of the CNET, what does that mean for us? If we're only going to be on the INET. There are pros and cons on both. And the other part is that Councilmember Schultz asked the question, what about if we do our own CNET and have somebody, if they want to use our asset, then I'm thinking, so we can possibly do that, but what would that mean? Because we tried to do that when we hired Frontier to do the retail on all of our excess fiber. And we didn't get much, did we? Did we get anybody, any takers?
we had a management agreement with Frontier Communications
Yeah.
that started back in 2011, and we never obtained any customers on that agreement. I think the outcome of that agreement was they covered a portion of our locate costs, our Gopher One locate costs, which was helped us defer our annual maintenance. And then
Yeah.
they also provided us some marketing of those assets at that time that, again, never came to any fruition
Yeah.
with any customers.
Yeah,
I think
Yeah.
what I was asking was something slightly different, if I may clarify.
sure.
So I'm not talking about Burnsville selling or being on the front end of selling it. What I'm talking about is, say Lakeville does, and they have a customer through the DBB, and they need to physically use a small portion of our fiber, and they would like to come through it. Rather than it just being an automatic process, since we would be involved in the DBB, they could approach us and just say, we got a customer through DBB, they want to do CNET, we're going to go through a small area of yours, so we'll pitch you whatever. And then we
So
would say yes or no.
a company in Lakeville might have someone in Burnsville, or maybe a warehouse in Burnsville. And they want to communicate between the two entities. So that means they're going to be using some of Burnsville's fiber to get to that entity. And so, yeah, what you're saying is the same thing I'm saying. Do we have someone then that would say, okay, what is the charge to ride our fiber? Because we're going to have to get something out of it. We're not going to ride it for free when we're paying for it. So, yeah.
I think,
So are you responding to this?
I can try to talk through that
And I'm just
scenario.
watching, we have a hard stop at 6. So,
I'll try to be quick. So that scenario was the situation we were in prior to joining the DBB, where we did manage all those types of relationships and hire engineering
Yeah.
firms and worked with third parties to buy
Yeah.
or utilize our fiber. And the time and resources that we put into that was extensive, which is one of the tenets of why the DBB, to some degree, was formed, to help us manage that going forward. But today, now that we're a member of the DBB, we could do something where we are allocating a certain number of strands to do for our own contracts with third parties, private or public. We would then be responsible for maintaining that
Yeah.
fiber separately outside of the DBB, managing and engineering those things outside of the DBB. But we would have that ability under the language of the JPA and the IRU, because the IRU actually allows us to identify strands of fiber that are either maintained or not maintained by the DBB. And we could always say, these strands aren't maintained because we want to use them for some other purpose, and then we would be responsible for maintaining those going forward outside of the DBB arrangement.
Is that an IRU for an INET only, or is that the current IRU?
That's the current
that
IRU.
combined?
yeah.
So part of the current IRU, we have to identify the strands of fiber that fall under the DBB's maintenance and management. And that's without signing the IRU today, we don't have fiber infrastructure identified, which is their responsibility to maintain. Once that's done, we could say, and again, for example, if we have a length of fiber that has a trunk of fiber that has 100 fibers in it, we could say 50 of those fibers are for institutional network use, and 50 of those fibers we don't want you to maintain. And we're gonna use those for whatever we wanna use them. Then we're responsible for
Yep.
maintaining those fibers. But then we have the flexibility
Yep.
then of having an arrangement like you've described,
Yep.
Councilmember Schultz, and work with third-party private sector in Burnsville only that could use those
Yep.
other 50 fibers.
Because we've done that in the past.
That's what we have on the books from way back.
Yeah.
That's what we started
did in the
doing. Yeah,
past.
that's what we've experienced without this
We have.
We have,
bad deal
yeah.
for us IRU. Before that came along in
Yeah.
2018, the reason
Yeah.
Councilmember Gustafson, I said, I supported is because it was a good deal for
Yeah,
Burnsville,
back
because we
then.
controlled our destiny. The DBB's new IRU took that away, stuck us for liability, limited our voting power, and basically gave up all the controls that we had in 2015. So it was no longer a good deal. That's why I've changed my mind on it, because the rules have changed, and the agreement has changed. If I may, quick follow-up.
Okay, because I have
Mr.
people.
Venables, quickly, can you quantify revenue? You referenced, earlier that we could capture the revenue that we're going to part. Does anybody have any forecast of what that would be?
No, because part of the ask with the systems plan update is to identify, and that's in the RFP language, to identify what is an amount that the DBB could charge for
Yeah.
new customers
Yeah.
moving forward. All I can speak to is the revenue that the city of Burnsville currently has with our current CNET arrangements, and that's, we have about $25,000 a year is what we receive. So that offsets our operating costs right now for institutional network.
Sure. One question for, my last question, this is for,
Then I'm
city-
taking you off cue because you have.
City manager, pardon?
Are you asking the question because you're in queue?
Oh,
So
sorry.
are you doing
Yes,
what
can I
you-
finish what, and then you
Yeah,
can take
and
me out
then
of
you're
queue?
off queue?
Yes.
Okay.
Off cue. Okay. City Manager Lee, last year, we had a discussion about the DBB, and I said, what is the net savings to the city for all of this work that we've put in, especially the last couple of years, with all of these contracts and all of this that has turned sour, obviously, in my mind, as a bad deal for the city? You told me that the net, if we got out of the DBB, it would be an $11,000 lost savings. So it's costing us, we're saving us $11,000 a year staying in the DBB. My question is, did that $11,000 factor in the $25,000 that we were getting in revenue and our costs, and that was really the net benefit?
Madam Mayor.
Yes, City Manager Lee.
Sure, Madam Mayor and Council, I'd have to go back and look at my numbers, Councilmember Keeley, I don't recall off the top of my head. Couple thoughts is, the two-pager that we provided in your packet was really to say, these were the foundational components that the DBB was structured under. Do those still fit? And if they don't, what would you like to look differently? And, I know the CNET, INET discussion is, we've had a lot of discussions on that. Councilmember Workman, with regards to INET versus CNET, simply put, INET is anybody who's a member of DBB. So because we own that asset, we're considered INET. We will let others, or we'll let others hop on our highway. They might be a public entity, but because of the type of use, because they're not an owner of the asset, they're considered a CNET. That's a simple definition in our JPA. So I know that that's caused a lot of conversation and discussion, but that's kind of the simplest way to look at it, I think. The JPA is a structure of how our agreement works. The IRU is what I'd call a technical document that, to Tom's point, says you have these assets, they need to be maintained. Here's how we're going to describe these assets so they can be maintained. So if there's a break or if there's an issue, absent the IRU, Tom and our staff would be doing that. So there would be a cost if we decide to say the DBB is not for us anymore. This is not a good fit for us. Under no circumstance is Tom and his team not going to have work. They're going to have to address it. We have fiber that we own. We got to take care of it. That's the long and the short of it. That's maybe that $11,000. I think there's some non-monetary benefits, but that's just maybe my 2 cents on it. What we're, I think, looking for, I think the board wanted to go out and say, hey, is this still a need for the community? What are the community needs for fiber? And that was the RFP, RFI. And the board said, time out a second, we're not quite sure about that. So go back to your boards and say, are these foundational components still accurate for you? So I think that's where we're at. I'm gonna look to Councilmember Schultz because you were at the meeting with the board that discussed it. I think that's where we're at.
So we are at, and we're all going back and asking our councils a few questions. And the first one is, do you want to stay in the DBB? The second one is, if you are looking to stay in the DBB, does the joint powers agreement still fit, or are you asking for changes to it? Which can include changes of definition, terms, those types of things. And once you get past the joint powers agreement, asking specifically about interest in INET, CNET, or as they are now, combined as to just, it's one thing. It's kind of considered one thing right now. So is there a feeling that you want those split out and decided separately amongst DBB members? So those are the main considerations that we are asking our councils so that we can come back and decide. And that's why we took that step back. We do have a number of new people on the DBB. And there are indications that there's just a feeling of wanting to be firm and checking back in, right? So that's what I'm looking for from council. So, the first question is, do we want to stay within the Dakota County broadband?
Okay, so I'm going to go to Councilmember Workman, and then we'll answer your questions. Then I'll go around and see what people want, because we're at 5:35.
Yes.
And this conversation is going to continue. So Councilmember Workman, you're on cue, so you're next.
Okay. I just want to go back in time for a quick second here. So I believe in past conversations when we've discussed the 25,000 in revenue from excess sales, did that not include the school district and the other entities?
It includes all of our CNET members, which would include the school district, MVTA, and the other entities that we receive revenue from.
Which until recently was considered INET because they were government agencies, from a terminology standpoint, right?
By definition.
We were getting revenue from them, but we thought of them as, up until just recently, when the lawyer for the DBB changed their mind on, or the new lawyer decided that it was now, unless you were the city, you're a CNET member, right? We always thought of the MBTA and ISD 1A1, and any other public, public agencies like us as INET partners. And that was what we were rallying around, our support for the INET. Right, is it correct to say that?
We've had previous conversations about the definition of CNET versus INET, and since the JPA has been in place in 2018, those terms have been consistent, and they've always been considered CNET.
I'll have to look back on that.
Yeah, that's
We've had conversations
new.
previously with council members
Yeah.
where you feel that they should be treated as INET. Those have been
Yeah.
the primary conversations.
Yeah.
But
Right,
It's a
and the
difference of
delineating
opinion.
factor is public versus private, really. I mean, that's the delineating.
Okay.
I'd like to continue because I got
We'll
30
continue.
seconds of questions out. Up till tonight, I thought the philosophy, or I guess I'll say it this way. My philosophy hasn't changed. I don't like the idea of the city of Burnsville participating in the sale of internet. I am okay with us working our own infrastructure for our own needs, but I do not like the idea of the sale of internet from us. Your question is should we stay in the DBB? I am comfortable staying in the DBB because I don't think Tom should have to manage our assets by himself. So I see the benefit of the DBB as a whole to manage what we already have in the ground. I don't know what the JPA says because I feel like I haven't seen it in over a year. So to answer your question, Kara, do we stay with the current one or revise it? I don't know. And then if we're okay with it, what interest do we have in INET versus CNET or keep combined among? My only comfort level is with INET, and I'll just reiterate what I said earlier, that I'm not comfortable with CNET. I'm fine with INET. It doesn't sound like that matters because we've combined the two and not differentiating between INET or CNET. So I don't know if you can rewind that process or not at the DBB, but
I think at this point, the board is pretty open, and that's why we are asking our councils.
that's been my my statement since this began, and that hasn't changed. So that's where I am.
Okay. So then I'm going to go to Councilmember Gustafson because you're in queue, and then I think we understand where Councilmember Keeley is at, but.
I haven't answered those three questions.
And you're
Councilmember
going
Schultz
to,
posed.
yeah, so you're in queue to answer the questions. Okay.
Your turn.
City Manager Lee, did you want to comment on? Yeah.
I don't
Because-
remember.
Yeah, because you're on queue.
I think I took myself off. My apologies, Madam Mayor. If I recall, I will put myself back in the queue.
Okay, so Councilmember Gustafson.
I just wanted to clarify something Councilmember Workman said. DBB is not about selling internet to anybody. Burnsville is not about selling internet or providing any type of content to anyone. This was about leasing opportunities for people that do provide that want to come into our city or our county and provide that for our businesses and residents. We have nothing to do with that except allowing them into our system and collecting revenue for that. They even put their own equipment in. We don't even do the equipment on it. It's just leasing the line. That's all it is. And it's lines that our taxpayers have already paid for, and it's already in the ground. Thank you.
So,
the asset
and
we're
so for you,
selling.
you want us to stay,
I do,
okay,
So yes, on staying in the DBB.
absolutely.
Do you have any things you want to have addressed on the joint powers?
Not really. I thought we did a good job with it when we did it years ago.
Okay.
As far as, and of course, you guys all know I'm in favor of an INET and a CNET going hand in hand, because quite frankly, they're in the same cable in the ground, so. It just goes back to what I said in my earlier statement about providing access for people who want to come into the city, providing choice for our business and residents, and creating a revenue stream to help pay for the INET, so we don't have to tax for it. That's where I'm
Councilmember
at.
Keeley.
Thank you.
I have always been a supporter of the DBB for an INET, period end, for public entities like the school district, like the MBTA and the city. I think we discussed earlier a path to get to our version of the CNET. In other words, the JPA, is that the one that's been in place for at least 4 or 5 years or more?
March of 2018.
2018 was the renewed JPA. Wasn't there one previous to that?
No.
No.
That's when it started, okay.
No, that's it.
So that one has been guiding us. Then along came the IRU and kind of messed things up. And so under that guidance, that JPA, where we control our assets and we don't have to give up liability, we don't have to be on the hook for liability, we don't have to give up control, then I think there's a path to us if we want to continue to do that or not. And there's diversity of opinion up here whether we would continue to renew any of those existing contracts when they come due. But I want nothing to do with the CNET period end, and it is a different thing. We're not talking about the physical fibers. We're talking about what's going to run over them and what's going to be the liability of what runs over them and who's on the hook when something goes wrong with these multiple cities. So I like what we have today, what we had back in 2015, the direction we were going, and what we have today, because we've never signed an IRU with the DBB, which would have given up a lot of control and it would have taken our voting rights away. It would have diminished them. Number one, as Burnsville, we're one of the largest providers. Let's remember that we're one of the larger members of the DBB, and we would have been on the hook. So, and for quite frankly, all this work for saving $11,000, man, it's becoming less and less of a good deal. And so if the INET, if we can get a clean IRU for an INET, I'd support signing off on it. I said that a year ago. We've been waiting for a year for this. And what we got after we asked for it the first time was, oh, now they're not separate, they're together. We have a combined one. We said that muddied it even worse. So I'm all for staying in the DBB because you get efficiencies out of it for the INET period end. That's what I think we all need to unify around. I will say also, Egan went their own route, right? They did their own fiber, and then they abandoned it after they lost a few $1 million. Why haven't they joined the DBB? If the DBB is such a good deal, why hasn't Egan jumped into this party with us?
Yeah, well, I'm going to go to City Manager Lee.
I can't speak to what Egan's decision was. I will say that their approach was very different than what the DBB covers. I think I heard you say, Councilmember Keeley, that we would be selling content, and I just want to clarify that the strands are what we would
We don't.
But what a provider would be accessing as far as
Yeah.
any
be
breaks or anything, that's why we have the IRU for maintenance for it. So it's a commercial grade, because we expect that for ourselves. We also would expect that for anybody else who'd be using that asset. So I want to make sure I didn't mishear you. so.
Yeah, I didn't state that we sell the content.
Okay.
It's the content that's running over it. Is it from a private business
Indeed,
versus
yeah,
a
indeed.
publicly owned
No,
business?
it would be a private.
Private, yeah.
Yes, yep.
Okay.
Because we don't
So-
sell widgets.
Yeah.
Do not.
So
I thought I heard that recently.
I'm going to make a statement, then I'll come to you. You want to have a big, you,
Yeah.
Respond to this Egan comment.
yeah, and then I think the last statement then will come from Councilmember Schultz, because of what we're going to take.
Exactly.
So I have not changed with regard to our being part of the DBB. Simply because when we did the JPA and understanding all of this, it's always been from the very beginning, and we've talked about leveraging our resources. Because this is good for all of us when all of the different cities in Dakota County are working together to manage what we have, all of our assets, and to leverage those resources. There's efficiencies for all of our public resource, all of our assets. So there's efficiencies there. And I always like the fact that we can collaborate with our neighbors and make sure that we have economies of scale and lower the cost to all of our residents. And that's what the DBB was about, and that's part of what the benefits are. And when you look at the INET and how we connect all of our facilities, that's the reason why we built our fiber system, to connect all of our, because that was a need. And then we had excess fiber. And so the thing is, from the very beginning, the DBB was not going to be a retailer provider of service. No. So for instance, like a
Joe's internet service.
yeah, whoever sells like Frontier. If Frontier wanted to buy service from us, they're going to be responsible for everything, right? They're going to be responsible for the content that they run on our fiber. They're going to be responsible for the maintenance of that fiber that they're using, correct?
No.
No, that's DBB.
To that point,
Yeah.
we have an example. So today, Frontier is using city fiber to deliver services to one of our tower assets for their, one of their customers, which in this case is one of the major wireless carriers. And in addition to that, they have fiber in a stretch of right-of-way along Burnsville, McAndrews area for delivering service to another customer. And so under that scenario, they are paying us some revenue for that, but we're responsible for maintaining that. In our current situation, the DBB maintains that on our behalf.
Okay, so the DBB is maintaining that rather than us maintaining it like before.
Correct.
Okay, so for me, when I look at all of that, there's also redundancy that also protects us. With the DBB, there's redundancy. If something goes wrong, the DBB has redundancy for all of that. For any of the breaks in service, is that correct?
That's correct. We have standards in place
Yeah.
that they respond to.
And if there's any negative impact to any members, the DBB is handling all of that.
Correct.
Okay. So for me, when I look at all of that, because if we did it in-house, you're going to have to hire someone to do that. So that would be a possibility if we did that and bring it in-house.
Yeah, I think that's an accurate statement. I don't think we'd get a whole lot of budget savings per se. Our DBB investment would be used for staffing to
Yeah.
offset it and help
Yeah.
Tom.
Yeah, but the thing is, we won't have that collaborative and that leverage of resources. We won't have that if we're on our own.
We will miss some of the benefits of
Yep.
a scalable collaborative.
And for me, also, the potential economic development opportunities is also big, because that's what all of this is about. for us, it's about economic opportunities. It's about how we maintain the assets for the good of our businesses and our residents. So I want to make sure that there's high-speed fiber network, because yes, there's all of these wireless services, but at the end of the day, they're going to have to come down to the ground and pick up a fiber to get into a distribution, because not everything operates on just Wi-Fi, correct?
Majority of the towers you see in our community and around use fiber as a backhaul technology to
They-
connect those
yeah.
towers together.
Yeah,
Correct.
I remember that from your first white paper. You can have fiber, but you still have to come down to the ground as a backhaul.
Correct.
Okay. So that's where I'm at with, because for me, it is about leveraging resources. It's about economic opportunities. It's about making sure that there is redundancy in everything that we do to ensure that our businesses and our residents have the services that they need in this new global highway.
Okay, so to be clear, you are yes for staying in the DBB?
Yep,
You are yes for the current JPA?
yep.
And you are in favor of both INET and CNET?
Yes,
Thank you.
okay. Councilmember Gustafson, you wanted to?
Thank you, Madam Mayor. I just wanted to respond to the comment Councilmember Keeley made about Egan. You're right, it was a different model over there. Egan lit their fiber from the beginning. Egan put nodes in throughout their entire city. Egan took the fiber to their customers' doors as well. And Egan did their own marketing over there, and Egan, all they had to sell was Egan, because we didn't have anything like the DBB where all of Dakota County could be a part of
They
it.
did fiber to the door?
They did fiber to the door of the
Last mile is
the
always so expensive.
customers that wanted it, they brought it right to the door. I had a meeting with their city manager and their IT people 2 years ago, and we went through this whole thing, and that's why they spent all that money, and they're still providing CNET to customers there. They've backed off the marketing end of it, and as your question of why they haven't joined, the only thing I can tell you is they probably have a lot more fiber than we do, and they don't want to pay that bill right now until we get everything up and running. And I bet if we ever do get it up and running, they're gonna jump on board so they can be part of the entire Dakota County
They
economic
did
development
fiber
team.
to the door?
They did fiber to the door of the customers that they acquired. They didn't go to everybody's door, they just did
That's
to
the
the
last
customers.
mile, and
I know,
that's highly
I know.
expensive.
But
Did they note how many customers they actually signed up? Because I heard it was extraordinarily small.
It was small.
It
Oh,
was.
they're the first to admit it, and they
Like,
told,
it was
and
a
they said they
massive
did
money
a,
loser, and they
they said
basically
they did
pulled
a
away.
bad job marketing it, and the other part was they only had Egan to sell. That was it.
Well, that's a pretty big city.
Well, it's not that big a
Commercial.
city.
A lot of
Not when
commercial.
you compare it to all of Dakota County.
We have 5:51. Councilmember Keeley, you wanted to make a statement, and then I'm going to have the last word go to Councilmember Schultz.
Question for Mr. Venables and our liaison, Councilmember Schultz. Can the DBB define who is INET and who isn't? Whether
Yes.
the lawyer or whatever, because I understand the school district was identified as an INET, not a CNET, at DBB meetings.
Yeah.
So really, the control of who is going to be considered an INET or CNET falls within the power of the DBB.
Yes, and that was one of my questions was, did you want me to get clarity on that, or do you want me to advocate for one definition over another?
Yeah, I mean, to me, INET has always meant, in all of our previous discussions over the years, INET has always been the city, the school district, MBTA. It's never been private sector business, or they were never CNET. This is a recent update that I didn't pick up on earlier, but I'm getting conflicting stories from other members of the DBB that they've always been INET. And that's also been an interpretation of
Yeah.
a lawyer. One lawyer says they're INET, another lawyer says they're CNET.
Yeah.
I think it's something that is more a purpose of the DBB itself to decide what they want to determine.
I think
is
that
INET
would
or
be a
CNET.
great thing. What is the definition for both?
Okay.
Can I
That is
just get a
something I'll get
clarification
clear.
from Tom? Am I mistaken, but wasn't it discussed that at the end of the day, when someone's coming on as a CNET, that if it's coming through our city, that we would we still have the choice whether it's coming through here or not? Did we not still hold that local authority?
That's
So,
currently
so
in
we
the
didn't
lay.
lose any authority on
No.
that? It has to come through us for approval anyways?
That's right.
That's correct.
All right,
Yeah.
thank you.
That always has been. Am I correct?
Yes.
Yeah,
That's
it
part of the
always has
JPA
been.
language.
So there's been no
currently.
control loss here?
Yeah, it's
in
the
the
same
IRU,
thing
that's
as
what
all
we
of those
The JPA.
towers
I like
that
the
we
JPA.
have when Verizon wants to put antennas on our towers, or they want to, they still have to come before us to get approval.
Correct.
Yeah, so it's the same thing.
Thing.
Through the JPA, correct? Does the language of the IRU change any of that?
No, they
Not that I'm
still,
aware of.
yeah.
I think we need to read that again then.
No, I think when they're going to be coming through our asset, it's the same thing as if Verizon wants to put an antenna on Buck Hill Tower. They have to come before us to get that approval. Or, we have that one pole at Mary Mother that was a private pole, or the one over at Risen Saver. They still had to come before us to get that approval. And I think it's the same thing with regard to using our asset, our fiber asset.
The city has to approve.
Yeah.
Has the right to approve the use of the city's assets through the JPA
Yeah.
language.
Has the right, or
Yeah.
have we? Because I don't think I've reviewed one DBB right-of-way application since I've been here.
There hasn't been any.
There hasn't been any. There hasn't been one.
There hasn't been any.
But I think you have been when we had to approve.
So are we building a store that no
Why?
one's going to shop at?
That's what it feels like.
No, if you listen to the incumbents, there's a lot of people that want to come here.
We have 5 minutes.
I-
Councilmember Schultz, you want to make
Don't
the
volunteer,
last
Certainly.
statement?
Okay, so what I want to do is I want to restate where we're at so that I have clarity, and if this is not where we're at, please tell me. So what I have is that Burnsville City Council is unanimous in wanting to stay with the DBB. I have that Burnsville is unanimous in wanting to stay with the Joint Powers Agreement. I have a split decision on if we want to split out the INET and the CNET, but it is majority who wishes to have those split in the IRU. I have that we have, and this I'm not sure if it's majority or unanimous, so I need clarity on this, to clarify the customer category between INET and CNET. Is that unanimous or is that majority? Do we all want?
Get the definition,
I want
that's
clarification,
information.
absolutely.
Yeah.
Okay, then that is what I have to go back to the DBB with. Is everyone, did I have that correct?
Yep. Yep.
I'm a happy camper. Thank you very
Okay,
much.
good. City Manager Lee.
I could maybe lend some clarity on the INET, CNET definition language. I happen to be able to pull up the JPA. So participants are CDA, Dakota County, Apple Valley, Burnsville, Farmington, Hastings, Inver Grove Heights, Lakeville, Mendota Heights, Rosemount, South St. Paul, and West St. Paul. And then if we go under the definitions, and I'll get this out to the council too. INET means the use of the system by participants for their governmental and institutional purposes. CNET means the use of the system on any basis other than by the participants for their governmental and institutional purposes. So I think that's the definition that was created. If you're a member of the DBB, then you're considered INET. If you're anybody else, then, and the JPA was categorized as CNET. So,
Okay, so you're a happy camper.
I
We
am.
have 3 minutes, and so,
So that means
members of
Keely
the-
can't give his report.
members
Yeah,
of
we're
the
not gonna get to the
council.
Keeler
A lot of
report.
exciting transportation things to
Yeah.
report, but I'll save it for next month.
Yeah, so your report, you
It's gonna be twice as long.
can send it to us, you can, write it and send it to us. I have nothing. Anybody else? Do you have anything? Do you have anything to report?
Well, no, I don't.
No,
And you just went through all of yours.
Exactly, yes.
And,
It's gonna be a summer of music festivals, that's all I'm gonna
yeah,
say.
yeah.
And
then,
comedy.
And
Councilmember-
comedy, and comedy.
Yeah, and Councilmember Keely, you can send us an email on your report.
It would be more like a letter.
I'll wait till next month.
Okay, so, City Manager Lee,
I'm not standing
are
between
you
you and
okay
adjournment.
now with everything?
Thank you for the
Mr.
clarity.
Venables, yes.
Thank you,
And
Tom.
is there anything else for the order of the business? Okay, Seeing no one, we're going to be adjourning here with
minute
2
20
minutes, yeah. So by acclamation, we stand adjourned.